One thing that's certain is that in Australia, history tells us the price of petrol is a greater determinant of consumer confidence than any other commodity, and that includes house prices and interest rates. So there should be no great surprise that with petrol prices close to record highs, consumers have turned a little bit snaky. ANZ and Roy Morgan's weekly consumer confidence report out today shows household inflation expectations have jumped to their highest level since November 2012. And at the same time, consumer confidence dropped 4.3% last week and now is well below the neutral level of 100. Consumer confidence fell in every state except for WA. Now, let's bring in here the ANZ's Head of Australian Economics, David Plank, who's with me now. David, many thanks for your time. That's the truism, isn't it? If petrol prices go up, then consumer confidence, for whatever reason, tends to go down.
Well, we can see that relationship on occasion, and particularly now, I think that is a driver. Actually, if you look back at times when things are going well, even then, consumers can live with higher petrol prices, but very much it's in the focus at the moment. And I think in part it's related to concerns or views that real wages are falling, so people are really feeling it in their hip pocket at the moment.
So this is a really interesting thing, though, because you've seen interest rates on mortgages at record lows. You've got households with more cash than they've probably ever have in regards to the household savings ratio. You've had house prices which have risen 20% for most households who are owners of their homes over the past 12 months, and yet petrol prices go up and they tend to wet the bed. That seems a bit curious to me.
Well, I think there has been a few other things going on. So, Omicron, the pandemic, I think, means that confidence is a lot lower in general than it would be given the state of the labour market. So generally, when unemployment's close to generational lows, you would have expected confidence to be high. But there's a lot of negatives around Omicron, the COVID, and obviously, I think, to do with the war and more recently floods. So I think sort of petrol prices have arrived as an issue in the last month or so when there's been a lot of other things that have dragged sentiment down as well.
Yeah, I understand the floods and those people affected by those floods. That could also have an impact on driving down the consumer confidence, particularly in those areas, Brisbane especially, which was adversely affected. Parts of New South Wales clearly very significantly affected. But there's one other aspect about this. Most people have got jobs. There is recovery that will come.
Yes.
And so this is the reason why, I'm again a little confused when households have probably got more cash than they've ever had on record. Reserve Bank says close to $400 to $500 billion worth of savings inside households. That's also the thing, because generally when consumer confidence falls, consumers tend to hang on to their cash. They're not as prepared to spend.
No, that's right, and that's why there are obviously some concerns around this and what it means. The correlation or the relationship between consumer confidence and spending is not as strong as it used to be, because there's a lot of things going on. We've in the last few years, obviously, confidence hasn't necessarily been a good indication of spending because people couldn't spend, or then borders open, or lockdowns end, and then people can spend. So the correlation between the two has been much weaker. But yes, it is a puzzle that with the labour market so strong, people are feeling pretty unhappy. But I think there's a lot of things going on that have got people worried. And now petrol prices, it's feeding into that whole dynamic of cost of living. And I really do think real wages are falling. So that is having a big impact on sentiment, I think, even with a strong labour market. We really need to see it flowing through into wages.
Let's go to that aspect of wages, because clearly the Reserve Bank is watching that very closely. You're right to say that real wages are going backwards because people's own personal inflation rate, regardless of what the official CPI is showing us, is probably higher right now than what their wages growth is. That says to me that when you get new EBAs to be negotiated, enterprise bargaining agreements, when you've got new awards to be negotiated by unions, there's either going to be significant industrial action or there's going to be significant unrest in the community, jostling to get a higher pay rise to match these increases in cost of living.
Yeah, I'm not sure if I'd use the term unrest, but I think it's a very relevant point. And the governor of the RBA referred to it last week when he talked about the psychology of inflation. So that's a new term we're all thinking about. And what he was meaning here, he wasn't really talking about expectations. He was really talking about behaviour. And the two types of behaviour that they're really focused on, and the RBA minutes which just came out, there's some comments in there from their business liaison program which go to these. The two things they're really looking for, one is what do workers do? Do workers move jobs to get higher wages, or do we see an increase in industrial action? The other thing they're looking for is what do firms do? Do firms start putting up prices because they think they can, and if firms start putting up prices because they think they can, in a sense, get away with it, then they're more likely to agree to wage increases. Whereas, the mantra or the theme that's been coming out of the business liaison program for the last decade really has been a laser-like focus on costs. If that starts to diminish because firms think they can raise prices, then the psychology of inflation will have shifted, and that matters a lot for the RBA. And I do think it is shifting, and I do think it will shift, and I think we will end up in a position eventually where the RBA will probably have to raise interest rates quite a long way to bring inflation back to where they want it to be. But that's down the road.
I was going to say, David, that that's also because at the moment they're looking through a rear vision mirror at much of the data that's coming through. So what we're seeing right now, the recent bout of petrol price increases in particular, is inflation that is still to come. David Plank, economist with the ANZ Bank, with those confidence numbers today. Many thanks for your time.
Thank you. Good to be there.